Hello traders, and welcome to another great video from Olymp Trade. And my name is Yaroslav Birchenko, and I welcome you guys. Happy New Year. This is going to be a great video to start your New Year's with. The topic of discussion is how to build an investment portfolio. In fact, the best investment portfolio. I'm going to give you guys a few examples of how you can correlate and diversify your portfolio, and we will take into consideration and discuss diversification or concentration of your accounts or of your assets, of your finances. Let's start the discussion by describing what an investment portfolio is. Investment portfolios don't have to be complicated. You can use ETFs or even use my advice today to build a simple and yet effective portfolio. Like any industry, investing has its own language, and one term people often use is investment portfolio. All this means is that all of your investment assets are that. They are the investment portfolio. Now, building an investment portfolio may seem intimidating, but here are steps you can take to make the process painless. No matter how engaged you want to be with your investment portfolio, there is an option for you. So let's define it. What is an investment portfolio? This is a collection of assets and can include investments like stocks, bonds, funds, ETFs. An investment portfolio is more of a concept than a physical space. Especially in the age of digital investing, it can be helpful to think of all of your assets under one metaphorical roof. Now, because we work with the Olymp Trade platform, I'm going to give you guys examples that will allow you to invest using the platform here, but also we'll talk about how you can invest in your country, the different bonds, because we don't have a bonds category in Olymp Trade. You guys are going to have to find that yourselves within your personal country. Like I myself, I invest in the bonds in my country and other countries around me because the rate of return is significantly higher than, say, in the United States or in Europe where the interest rate is at 0. So in your country, you may have an individual retirement account or a tax-free account, which I have, and you should look at those accounts together with using the Olymp Trade platform when deciding how to invest with them. Okay, so investment portfolios require you to understand your risk tolerance. That is probably the number one thing we should start with today. Your risk tolerance is your ability to accept investment losses in exchange for the possibility of earning higher investment returns. Your risk tolerance is tied not only to how much you have before your financial goal in retirement, but also how you can mentally handle watching the market rise and fall. So something that we see every day when trading the financial markets. If your goal is many years away, you have more time to ride out those highs and lows, which will let you take advantage of how the market's general upward progression is. So this is an hourly graph. You guys can see that it's very volatile. But if we zoom out to the one-day graph, or even better so, the one-week graph, this is a good investment vehicle. Like, have a look over many years. This has been an excellent investment vehicle, and we'll talk about the NASDAQ, the S&P 500, the Hang Seng today as well. So how do you build an investment portfolio? Well, the first thing you have to do is obviously open an investment account. Your account with Olymp Trade is already an investment account, and I'm pretty sure a lot of you guys have not opened up long-term positions. I have recently closed a lot of my positions, and I'm looking to open up new ones going into the new year. So after you open an investment account, you need to fill your portfolio with the actual assets that you want to invest in. Now, here are the top investments that we have. Number one is, of course, stocks. What are stocks? Like here we have Apple. Please bear in mind that this is a 5-to-1 stock split. So this isn't actually Apple falling. This is them giving 5 stocks to each person that has one. Actually, that one stock turns into 5, and they're worth all the same. So that was basically the mechanics behind that move. But stocks are a tiny slice, piece of ownership in the company. You are an owner of the business when you invest in Apple. Investors, they buy these stocks and they believe that they will go up in value over time. The risk, of course, is that like here we have with oil companies, and this is actually doing it too much justice, but what we have here is a huge devaluation, and that's the risk. The stock might not go up at all. It may even lose value. So to help get rid of some of that risks, investors invest in stocks through ETFs, and we have that here as well. These exchange traded funds, they combine a bunch of stocks. It's a collection from a wide variety of companies, and the general worth of those companies we can see using these indexes. Now, the ETFs that we have available on the Forex platform and the fixed time platform are very specific. So the ETF we have here is a volatility index of the S&P 500. And as the S&P 500 grows, this index usually falls. Now, when there's a huge market commotion or flight of capital, or some sort of force majeure situation, then this stock, like we had in April with the coronavirus, this index, this exchange traded fund shoots up severely. So that's what this is. We'll have different webinars and different videos for all of these assets. Just for right now, I want you to be aware that there are different ETFs that you can invest in. If you do opt for trading in individual stocks or investing in individual stocks, it's usually wise to allocate only 5 to 10% of your portfolio to each individual stock. So here we have Apple, Tesla, Coca-Cola, Microsoft, McDonald's. You never want to have your exposure to these stocks more than 10% of your account. All right? If you want to learn more about buying stocks, come to one of our webinars on our YouTube channel. It's Olymp Trade Global. We have a lot of videos specifically dedicated to stock picking and value investing. The next category, unfortunately, which we do not have here, and you will have to do this on your own, is bonds. Bonds are basically loans to companies or governments that get paid back over time with interest. So basically, you have the opportunity to be a bank. And all of these companies here, Apple, Boeing, Facebook, Google, they all release bonds. But you also have local bonds from your local companies, whether you live in India, Africa, Europe, it doesn't matter. Everybody has government bonds and company bonds from your local government. So make sure to inquire, because sometimes the bonds are, well, bonds in general are considered to be safe investments, safer than stocks, but they have lower returns. But if you live in a developing country, you may have, significantly higher returns than, say, that you again would have in the US or in Europe. And since you know how much you will receive in the future in the interest when you invest in bonds, they're referred to fixed income investments, and you will have a better understanding of how much money you will make. A fixed rate of return for bonds can balance out the more riskier investments, such as stocks, within an investor's portfolio. But again, because we don't trade bonds, to find more information, you'll have to access the World Wide Web. Now let's talk about indexes or indices. One of the main gauges of investment success in the world of investing is if you do better or worse than the S&P 500. So judging from right here, from 34 to 37, it's only a few percent. It's only a few dozen percent that we grew. If you invested in April, that would have been a much better rate of return that you would have gotten. And the main difference between ETFs and indexes is that ETFs are managed by another company, while the index is a direct representation of market price action. Buying the NASDAQ index would have been the best investment opportunity since 2006. If we look at it all the way from 2006, here I think it would be better. Oh, this is fixed time. Remember, we had the great financial crisis in the United States. The real estate bubble exploded, and all of the investors across the world that invested in the US real estate market, they were really hurt really bad. And since then, the NASDAQ index would have been the best opportunity between 2006 and 2017. In 2017, we had Bitcoin take over that role as the most profitable financial asset. But remember, in 2017, Bitcoin was not available to trade on major stock exchanges. But Bitcoin took over the role as the most volatile and biggest earner after 2017. Although I do want to remind you that it does have huge crashes, and that severely limits the potential that it has in the future. So we have made new record highs at $32,000 for one Bitcoin. Now, you may think of other things as investments, perhaps your home or your car or some art, for example, but those typically aren't considered a part of an investment portfolio. Let's move on to the next part. You have to determine the best asset allocation for you. So you want to know, you want to invest in mostly funds or indexes and a few individual stocks, but how do you decide how much of each asset class you should invest in, or how much do you need? How do you split up your portfolio among different types of assets? This is actually called your asset allocation, and it's very dependent on your risk tolerance. So the basic thing is that if you're 30 years old, then the rules, there's a commonly cited rule of thumb. It suggests subtracting your age from 30 from 100 or 110 to determine what portion of your portfolio should be dedicated to stocks. So like I said, if you're 30, then the rules that I just explained suggest that you should invest 70 to 80% of your portfolio into stocks. And that leaves only about 20 to 30% of your portfolio for bonds or other investments. If you are 60 years old, then you should shift only 50 to 60% of your assets into stocks, and the rest of your portfolio should be either indexes or bonds. Now, an aggressive portfolio is ideal for someone with high risk tolerance and a lot of time to invest, when a conservative portfolio is better for someone with low risk tolerance and a shorter amount of time. Now, before I get in and I show you all of the different portfolio options that are available for you, I want to talk about rebalancing. Actually, let's do that after. So some of the portfolio options that are available to you guys, and I'm sure you guys have all heard of Warren Buffett. Well, Warren Buffett invests in such a way that 90% of his investment is in the S&P 500 and 10% are in short-term government bonds. So what that means is that Warren Buffett is a strong believer that this index draws a perfect line. There is no better, there is no better investment opportunity than trading the S&P 500. And you guys can do that by clicking here in the Forex option, or the Forex platform, and then opening up the S&P 500. The next portfolio option, so this portfolio follows the instructions of the great Warren Buffett, you guys, and this is what he has set out in his will for his wife. He outlined this plan on page 20 of his 2013 letter to Berkshire Hathaway shareholders. And the basic principle is to own a cross-section of business that is bound to do well. Now, as you guys may know, the US is the strongest and biggest economy in the world, and if anybody is to do well, they are the most likely candidate to do that. And on the Olymp Trade platform, it's very cheap to buy and own pieces of the S&P 500, and plus you get a very hefty multiplier that you may normally not get from, you know, your bank or any other kind of service provider. So Warren Buffett thinks that this strategy is appropriate for those of you who don't invest for a living. So I'm a professional market speculator, and I do this for a living. My recommendation is to use this strategy to those of you who do not have every single day to meditate and to think on the market and to watch what the different market valuations are. Warren Buffett believes that this portfolio is superior to those attained by most investors. What that means is that Warren Buffett thinks that pension funds, institutions, and individuals usually cannot do better than what the S&P 500 does. So keep that in mind, you guys. The drawbacks of this portfolio, I need to discuss this with you, is that it is exclusively invested in the United States. And I believe that international diversification is also very helpful. And there's only just 2 asset classes, so a lot of opportunities for investment are missed. But historically, this investment portfolio has delivered the strongest performance over multiple decades and can endure potential periods of severe decline. Like again, we had in the Great Financial Crisis, also 2008, 2009, we had a huge fall. So this is a strong portfolio option if you are not a professional market participant. There is another successful investor. His name is Paul Merriman, and he has created the ultimate buy and hold strategy. I want to discuss this with you guys as well. He focuses most of his time on educating people how to invest through his foundation. He has a number of variations of this portfolio that I'm going to teach you guys, but this is the main one that captures all of his insights into equity asset classes. It's important to remember that Merriman is holding bonds, so this is not a complete 100%, but it is the stock part of his portfolio. So 10% we have in the S&P 500, 10% US large cap value investing. All of our stocks over here are large cap and value investment options. Again, if you want to stock pick specifically, please visit one of our webinars or videos that is dedicated to this part of investing. Now here's a really interesting asset, US small caps. Where do you guys think you can find that? This is a very, very good question. Here we have the Russell 2000. The Russell 2000 is the medium to small cap stocks of the United States. So these are their mom and pop shops, the small stores, the small businesses. That's exactly what this index captures. U.S. real estate investment trusts. So rates as real estate investment trusts. This is another category that we have here on the ETF category, real estate. US real estate ETF. Now, it may not look the best, but keep in mind that during this year, interest rates have been lowered, and people right now are kind of panicking, they're kind of worried. But in my mind, I'm keeping an eye on this index for the near future. As you guys can see, there have been crazy attempts to break higher over the last 2 months. And again, that's because the interest rate is at a very bare minimum, and a lot of people are going to start buying more homes as a way of investing their excess capital. So again, this is one of the major parts of this international portfolio. Now, international large cap, this is something in the sorts of the European Composite Index, the CAC 40, the FTSE 100, the Euro Stoxx 50. These are all international large cap stock indexes. So it would be a good idea for you to also invest in some of these financial assets as they diversify and they add more exposure to more growth opportunities. Now, international small cap, unfortunately, we don't have many small caps here. Even the stocks that we do have available that are from Europe, like BMW and Nintendo, or not Nintendo. I do believe we previously had Nintendo, but unfortunately it got taken off the platform. So international small caps and emerging markets. Now, this is a very strong category that after the huge rally in commodities that we had this year, indexes like the Hang Seng are very interesting options as well. So this would be an emerging market index. Merriman's approach is to start with the S&P 500 as a base, and then he would add small amounts of other asset classes to get better returns or reduce the risk, or both. The last example of portfolio allocation that I want to show you is the Ivy League endowments. All of you guys have heard about Harvard, Princeton, Yale, Columbia University. These are the top universities in the United States, arguably in the entire world, and they also have their own investment program. They invest 35% into US equity. That is the stocks that you guys see here on the platform. 28% are in bonds. Again, my recommendation is you hold some local bonds and some international bonds that offer great rates of return and have an opportunity to grow. What I mean by that is recently there was a problem in Belarus. Some of you may not even know about this country, but it is one of our neighboring countries. And there was a political debate. There's actually an election, a presidential election, and it was, I don't know all the details, excuse me. I don't know all the details about it, but I know that the European Union put some sanctions or some threats towards Belarus, and their government bonds fell to about 900 out of 1,000. So what that means is that when a bond is released, it's released for 1,000, currency, and if it by the end of the term it has to be paid out for 1,000, and the price varies. The price can fall to 900 or it can rise to 1,100. Well, the price of those bonds fell to 890 something. I didn't get in right at that time, but I got around the 900s, and the rate of return was 9% at 900 for 5 years. So what that means is that by the end of 5 years, not only will I make that excess 10%, I will also make 9% every year. So it was a very lucrative opportunity, and I beg you guys to try to find them as well. It is a very rewarding search, I guarantee you. So let's have a look at the other Ivy League options. The next is foreign equity. So equity is just a smart term for stocks. So foreign stocks, again, like we had, here it is, Nintendo. I thought we had Nintendo. Nintendo, BMW, those would be foreign equity stocks. And commodities. Here we have a large list of commodities for you. Tradable on the Forex platform are a few less. We have Brent and metals. Nonetheless, these are the top commodities you want to be investing. If we forget about what happened in 2019 and 20, 16 to 19 were good periods of growth. So keep that in mind that commodities are also very good investment options. And then the last 11% is real estate. So this is a really good balance for your investment portfolio. Now, once you have already made these investments, this is something that I don't want to miss talking to you guys about. Over time, your chosen asset allocation may perform differently. Some advisors recommend rebalancing at set intervals, like every 6 or 12 months. I believe that is just crazy. My recommendation is looking at your investments no less than every month, adding to them no less than every month. Every month you get a paycheck. Every month you should take a small part of your paycheck and put it into your investment account. It doesn't matter if it's with Olymp Trade or if it's with your bank. Make sure that you do this. What I do is I sell any stock that has risen significantly, and I buy any stock or bond that has fallen. Now, keep in mind that I'm very careful with the way that I choose my investment options, but the old buy low and sell high is king of long-term investing. It is the best way that you can invest for the long term. Also, I want to talk about diversifying versus concentrating. Warren Buffett and his friend and colleague and partner Charlie Munger, they laugh at diversification. When you diversify, you obviously get rid of some of the risks, but you also get rid of some of the reward. So if you're a really good stock picker like Warren Buffett, there's no point to diversification. That's why his stock portfolio is very concrete, is very, specific. So how you can diversify your portfolio is investing in some currencies. Now, what would I do with currencies? Well, let's have a look at the US dollar average. Guys, have a look at this currency. This is the US dollar compared to all of the major currencies. This is a sell. So what I would do in this case is I would diversify my portfolio on the Forex platform with something like the Aussie dollar, US dollar. So the US dollar is falling. What would I do here? I would buy this asset. So I would go against the US dollar. Stocks, we already talked about. You guys want to buy the best and strongest stocks. Out of the ones we have here, I would say Alibaba and Amazon are the top stocks. Boeing has a long way that it can come out of a correction. Again, we're in a very strong correction compared to what it was worth last year, 260, 300. Boeing is very, very undervalued. And when we start traveling again and people start buying Boeings, or governments start buying Boeings again, then it's going to be another really good stock. Disney is one of those growth stocks, crazy good growth stocks. IBM and Google, although IBM has been having a very difficult time trying to find a way to make more money, I do believe they have a future, and because they're so low compared to the other market, they have more room to grow. And then we have the likes of Google, Facebook, Netflix. I'm sure all of you guys have heard of that. I personally don't like Netflix, but Microsoft is a AAA plus investment grade stock. So something to look for. Bonds, I would look at local bonds. Again, we talked about this. And then the real estate fund that I showed you on the platform. There's one more portfolio I wanted to talk to you guys about. It is Bill Bernstein's no-brainer portfolio. I don't have a picture for you. Yeah, I don't have a picture for you guys, but basically it is 25% bonds, 25% European stocks or indexes, 25% Russell 200, and 25% S&P 500. I got this from his book, The Intelligent Asset Allocator, and he examines academic research that he has done and historical performance to arrive at a very simple to implement portfolio, and it's expected to perform well for the long term. Now, what I mean by long term is, several years, 2 to 10 years. What have we learned? This is I guess is the main point that I want to get across to you guys. What have we learned by looking across all these portfolios? Well, each of them advocate owning both stocks and bonds. The exposure to bonds, it varies. Buffett's is very low at 10%, and a gentleman called Harry Brown is higher at 40%. But they all fundamentally recognize the value of having some bonds and some stocks in your portfolio. Basically, a portfolio without bonds can get very, very risky in the short term. And if your exposure to bonds is too high, then you may miss out on longer running returns, again, like we have from the likes of the S&P or the NASDAQ. The other thing which occurs in a few portfolios, but not all of them, but some of them, is that using commodities or real estate to deal with too many bonds or too many stocks falling together. This is something that we saw in April. Falling stocks, falling bonds, everything was falling. Well, guess what? The real estate market was not falling. People were still looking for a place to live. The real estate market took a little bit longer to fall. But again, there's no consensus here. Some would exchange these assets entirely, but those that include favorable allocations into real estate assets is somewhere around 10 to 20%. So if you are looking to invest into real estate, 10 to 20% is enough, is maximum. And again, you want to have the signal, a few strong days and a few broken resistance levels on the real estate market. Most portfolios, this is the last thing I want to tell you guys about, most portfolios, but not all of them, they include some sort of international stock market exposure. So if none of these particular portfolios appeal to you, there are some clear lessons that you can take away. First of all is own both stocks and bonds. Secondly is consider real assets like commodities and real estate. And finally, international diversification is helpful. All portfolios are different in their precise allocations, but most of them follow these patterns that I have taught you guys today. So this information that I've given you guys, I want to supplement it with something else. Now I know that I promised not to talk about the different assets that you can get, but I made a nice list for you guys. Here's now I'm gonna add this to the description of the video below. Here's a list of all of the main financial assets that we have in the stocks and indices category on the Olymp Trade platform. And what you guys do is you go here to finviz.com and then click the screener. And then in the screener, you copy and paste this list that I'm going to give you here in the tickers icon. So all of these little words, the PG is Procter & Gamble, this is ORCL, Oracle, Work is Slack, eBay is eBay, obviously NVDA, Novartis, things like that. So you put it in that category and then you click enter. And what you have here is a list of all of the, and actually you have the graph of all of the stocks that are tradable on the Olymp Trade platform. So what you guys do is you can use some of these filters to filter and make better investment options. Even if you just move your mouse down the list, you can see which stock is growing and which stock is buying. Again, what we want to do, because all of these assets are top-notch and they're all expected to grow. Again, none of these are currencies So they don't fluctuate around the middle, they actually have a desire to go higher. So what you do is you look at this list and you find an asset that is heavily undervalued or going through a rough period, and then you wait. You wait for it to show signs of a desire to go higher, and then you go ahead and invest in that platform. Again, if you guys want to learn more about the process of stock screening, go ahead and leave a comment in the comment section below, and I will spend a little bit of time teaching you guys how to do that. Thank you so much for your time, for watching this video. Please leave a thumbs up if you enjoyed it, if you learned something new, and share the video so that your friends can also learn a thing or two in the new year. I want to wish you guys a happy new year. I hope that the 2021 will bring you guys lots of joy, lots of success. I hope you guys will stay healthy, stay positive, and I hope that the investments that you make this year will bring you significant returns. My name is Yaroslav Birchenko. Together with Olymp Trade, I thank you for your time and wish you guys good luck trading out there. And see you guys next time. Peace.